music going, and let's have a llama party.
Signals in the deep, markets never sleep. Whales move silent, but we speak. On-chain truth, no disguise. This is Leviathan, open your eyes.
Good GM fam. Today is Friday, August 8th, 2025. It's the first day of the rest of our lives, and I am thrilled that you have chosen to spend it with me. So I hope it is all of our best days yet. For my sake, I know it's going to be fun because I didn't think I was going to get to have this llama party today, but the timing seems to have worked out. At least I think it has. Maybe I'm in the wrong time zone. Who knows? Like maybe I got the dates completely wrong, the times completely wrong. But I think it's the normal llama party time, so that means we're going to have some fun with this kind of unscheduled impromptu live stream. And I also, as mentioned, I am traveling. I happen to be in Las Vegas right now, which is not always the nicest place to be, but I've had a fantastic time so far. I am representing the Rare Evo conference, and if you know anything about me, when I have to go to conferences, I usually just spend most of my time in the hotel room hiding out and not having to talk to other human beings. So since I'm hanging out and not talking with human beings anyway, might as well just hang out and chat with all of you. And it's sort of a perfect opportunity because I need to practice my speech. I'm talking at the Rare Evo conference today, so if you are here in Las Vegas, do stop by and check that out. But it's not going to be for another little bit. It's going to be around 3:30 p.m. here, so I got some time, and I'm probably just going to be nervously pacing around my hotel room practicing my speech anyway. So I figure, why don't I just practice it in public? Why don't I use the opportunity of this llama party live stream to deliver my talk, and I can chat with you guys and you can let me know if it's any good. And we got this new format for llama parties where essentially I just kind of toss the link out, and if anyone wants to come and join me on stage and come chat about anything, like, you are welcome to, as long as you are not like, we don't exactly have the ability to get demonetized because we're not monetized, but you could come in here and spout some stuff that could put us in trouble. So as long as you're not doing stuff like that, if you're willing to come along and act like a normal human being, the link is in the chats. We are coming to you live on X and on YouTube. If you're on X, by the way, take a second to retweet this and share this with all of your followers so we can get the audience up just a bit. And while you do that, I will explain what's going on with this QR code in the upper left-hand corner. That is what we call the Squid Pass. It is a little thing you can buy at leviathannews.xyz. We got this thing called auctions, where you can every week buy the Squid Pass in auction, and it will get you a lot of advertising rights throughout the Leviathan ecosystem. So this Squid Pass will automatically update to the owner of whoever wins the next auction, which means that anyone who is curious and clicks through will get to see the current holder of the Squid Pass is AIOZ. AIOZ is the leaders in DEPIN, and they also have been dabbling into AI, as you might have guessed from the name AIOZ. They're putting the AI in that. They've been doing this pretty interesting real world competitions designed to foster some innovation and establish a shared AI model and data set ecosystem. They launched these AI challenges. They've got things like a face anti-spoofing challenge. Highly recommend you click through. It's going to take you to their Discord, which is just a lot of fun to go hang out in their Discord and just hang out and have fun. So if you don't like AIs for some reason, first of all, check yourself, because why wouldn't you like AIs? They're awesome, but you can dethrone them. We've got an auction that's expiring in just 25 minutes. We'll be checking in live. It's already seen some intense bidding, but not nearly enough in my opinion, because you're able to get, in addition to the QR code here, if you own the Squid Pass, you will be featured on our website. That's leviathannews.xyz. You'll be the pinned post on X, and you'll be the pinned post on our Telegram feed. Our Telegram feed is a newsroom of live updates from around the Web3 ecosystem. We've got pretty good following there because our news feed is completely decentralized, so anyone can post news. So we have this army of degens competing to basically post stories, curate them, and edit them. And as a result, we've got nearly 20,000 subscribers who get 24/7 access to amazing news and views. So, always amazing stuff going on within the Leviathan ecosystem. We're building a decentralized media ecosystem powered by Squid. So, if you are just joining us now, I see we're up to 76 followers, which is pretty good. Not really appreciate you spending your Friday morning here. And would as mentioned, we have dropped the link into all the comments. So if you're interested in coming to hang out and chat with me, just pop through that link and we'll let you in. That's broadcasting live on X and YouTube. Other than that, like if you know anything about parties that I host, you know that they tend to, especially IRL parties, whenever I host a party, it tends to just be me. So I'm kind of used to solo parties. So I was just going to take the opportunity to practice my speech that I'm giving at Rare Evo here in about 8 hours. It's about a half-hour talk, so I can only practice this about 16 more times, maybe 14 if I'm going to take some time to actually like visit the amazing Rare Evo event. But I'm just going to go ahead and like start talking through this impromptu. And I just wrote this yesterday on the airplane when I was also kind of severely, I wouldn't say jet lagged because I am flying pretty close to the same time zone. But I had to, 2 days ago, like go up to visit Canada because there was a work colleague I desperately needed to see while they're in town for just a few hours. Got back super late, got up super early, flew to Vegas, very exhausted, and wrote the speech on the airplane. Basically, it's going to be like when I give the speech live, it'll almost be kind of like impromptu, like give and take, just me talking and BSing like I do tend to do on these live streams. So with that being said, if you want to like watch me fumble over my words and collapse and figure this out, let me get the slides that I put together up and let me just fumble my way through this presentation here. And it would be amazing if you guys like have ideas and thoughts and comments. Like probably have just enough time and probably just enough brain power to like be able to synthesize your comments into this. So without further ado, here's a preview of the talk that I'm going to be giving. And I actually hope to refine this talk into a new series I've been working on for curve coding tutorials. So just the last little bit of intro I'll give before I actually pop into like rehearsing the speech one more time is that I do these coding tutorials with Curve Finance on how you can basically integrate with some of the unique technology that Curve uses. Because Curve likes to use a lot of like Viper, and to interact with Viper, you want to know things like back in the day, Brownie is kind of dead, but there is other good ways to interact with Viper smart contracts, which is Ape Framework and Titanoboa. So I've got series on all of those. But the one that I'm missing is Moccasin, which is Cifrin Updraft is doing some really cool, like, first of all, they have some really cool Curve courses, as well as like Curve or like general smart contract programming courses. So I highly recommend you take a look at those. But they also have like built out a programming language called Moccasin, which is basically like a thank you to Brownie for everything it did for the ecosystem. They're trying to rebuild the magic of Brownie with this even better framework called Moccasin. So I'm trying to put together a course focused on how to integrate with some Curve contracts using Moccasin. And what I find when I do these tutorials, they work best when there's like a theme behind them. And the theme that I'm trying to do is institutional stablecoins. And there's a number of reasons for this, but one is because I think that it's like a really hot sector, of course, but also like institutional stablecoins. There's a lot of them coming online lately, and they are like, in my opinion, they do best when they kind of find their way into DeFi. So I want to make it easier for all this kind of capital coming on chain in the form of institutional stablecoins to understand the best ways to touch into Curve Finance and to touch into the broader DeFi ecosystem, and to do so using Moccasin. So I'm saying all this because the speech that I'm giving at Rare Evo, I will, when I actually get time, tighten it up, make it a little better. And form of this is going to be one of the slides, or sorry, one of the videos that I'll be doing with this particular Curve tutorial. All right, so I have talked endlessly about the context of this. We'll also maybe break about 20 minutes in if there's some hot bidding on the Leviathan News auctions that I mentioned to get this Squid Pass. Again, you can participate in that if you're interested in the auctions by going to leviathannews.xyz. Let me just bring up this here, and you can see that the Squid Pass Lucky number 8888 was the most recent bid. So there's been some pretty intense bidding action. It started at 2,000. It's already up almost 4.5 fold. The way to bid on this is the auctions take place on the Fractal chain. Fractal is actually like super easy to find your way to Fractal. Basically, all you have to do is you have to go to frax.com and you can bridge wrapped Frax ETH and bid using that. Or you can, if you have Squid, the native token of Leviathan, you can bid using Squid. Both work. And if you got questions about it, hey, come pop on the live stream and come talk to me, and we can I can help you bid bid live here. More than happy to interrupt this talk I'm about to give to do so, because the talk is going to be a little disjointed. Coffee is in scarce supply on the Vegas Strip. All right, without further ado, let me get through this talk I'm about to deliver in a few hours. You get a nice little preview of it here. And this talk I am entitling, let's see, this is going to work. The title of the talk that I came up with is Very Stablecoin Genius Act, or Why TradFi Stablecoins Need DeFi Stablecoins. And the way I came up with the title of this talk is because I noticed that when you go on crypto social media, you'll notice that there's one thing that unifies everybody, which is that everybody happens to be a genius. Whenever there's a new topic that comes along, my feed is just clogged with people who happen to be experts on that particular subject. How fortunate that they happen to find that whatever is the topic du jour is also the topic that they are capable of opining on. Now, that being said, it can be tough to synthesize all the different genius takes because sometimes they're contradictory. So we did a lot of research with this, and the thrust of this talk is we're going to be looking at centralized stablecoins, decentralized stablecoins, and how they fit into the recently passed legislation of the U.S. Genius Act. We're going to start this talk by giving some background. We're going to, because we actually get a lot of questions, especially from international people, about U.S. politics, because believe it or not, despite the fact people are geniuses about every subject, there is a lot of questions about the U.S. political system. So we're going to premise this talk on assuming that you know absolutely nothing about U.S. politics. And if this is in fact you, if you know nothing about U.S. politics, I have to say, can we please trade places? Because I know way too much, and it is a dumpster fire. And I completely envy your ignorance. Must be absolute bliss. But that being said, if you know nothing about U.S. politics, let's lay a bit of baseline, and we'll basically break down how the U.S. political system works in terms of how, on-chain mechanics you might be able to understand. So you know, at the very basis, the United States government is composed of three separate but co-equal branches. There's the judicial branch, which isn't really a party to this. And then there's the executive branch and the legislative branch. And to put this in terms that is going to be easy for the crypto community to understand, the executive branch essentially functions as a one-of-one multi-sig, or you might even just call it a hot wallet, where it's relatively easy to make transactions, but it's easy to also lose your private keys and have those transactions undone. This contrasts with the legislative branch, which is more like a 270 out of 538 multi-sig. If you've had the privilege of working with DAOs for any length of time, you'll know that the just getting a 2 of 5 multi-sig to agree on anything can be a hassle. So you can imagine that the complexities of getting a 270 of 538 multi-sig to act on anything is nearly impossible. So where the executive branch can come in quickly and make a bunch of changes, they can also get quickly undone by whoever happens to be sitting the executive branch next. Whereas when the legislative branch manages to actually get something through their 270 of 538 multi-sig, which has all these other wacky rituals layered on top, it tends to be permanent. So when people ask about we see all these changes happening with cryptocurrency policy, most of those can be undone, but the Genius Act is going to be around for a while. And in fact, the coordination to get the Genius Act passed, and the fact that it even passed at all, is kind of a minor miracle, because the US political system at this point is essentially devolved into both parties trying to throw the other party in prison, and yet they broke from this existential battle to agree on stablecoin legislation. And how did you get Congress to manage to agree on that? And this chart here tells the story, in my opinion. This is the breakdown of stablecoins by the underlying currency. And you will be asking yourself, is this a chart? Because it looks like the entire pie, and it pretty much is. essentially 99.8% of all stablecoins are denominated in US dollars. The other currencies are euro, Singapore dollar, but it kind of doesn't matter. US has managed to eat this entire pie. And what's really remarkable about this fact is that this was not the result of the United States push, as far as we can tell. We've been following stablecoins and cryptocurrency for about 10 years now. And for most of that time, not only has the US kept cryptocurrency at arm's length, but it has been actively hostile towards cryptocurrency. So I, as an American, don't get access to like nice things like using new DeFi protocols that have geo-fenced me or airdrops. That is where stablecoins are really remarkable and arguably have insanely good product market fit, because despite the US's best efforts, despite rampant hostility, in the absolute trenches of DeFi, where degens could have denominated stablecoins in whatever they like because there was no US push to do so, they still opted to use the US dollar. This is just a very remarkable feat. We don't know how this happened, but it's just because pricing in Bitcoin, pricing in Ethereum, those might be cool. You could price it in maple syrup futures or what have you, but people just wanted to denominate in dollars. So essentially what's going on with this cryptocurrency revolution of the past 15 years is that the entire world financial system is being reconstructed from the ground up. And it's sort of a minor miracle that despite the US's active attempts to prevent it, the US dollar was still encoded at the base layer, the DNA of this new financial system, which is an amazing gift for America. And it seems as if policymakers actually realized this and decided to act and pass the Genius Act to further enshrine it. One other piece of evidence that stablecoins have an insanely good product market fit is this chart from DeFi Llama of the stablecoin market cap. If you've been following crypto if you got in around like the past couple of years, you'll know that volatile assets, it's been pretty bleak. We saw basically a protracted bear market, which wasn't the most fun time to be in crypto. But if you look at the stablecoin TVL chart, it didn't really suffer all that bad. From 2022 to 2024, there was a bit of a drawdown, but it wasn't terribly severe. And we've been in a stablecoin bull market since 2024. We're a year and a half into up only for stablecoins. So stablecoins have this insanely good product market fit, and they are even somewhat counter-cyclical. So essentially, stablecoins are the killer use case for cryptocurrency. Why are we bringing all this up? Well, let's now dive into the Genius Act just passed, and we mentioned that the thrust of this talk is to talk about centralized stablecoins and decentralized stablecoins. And let's not make any mistake, which is that if you're looking at the field, essentially, you could look at this chart here, which is the market cap of stablecoins, and we've divided them into centralized stablecoins in green and decentralized stablecoins in red. And you would look at this and say, wow, centralized stablecoins have just completely won. The biggest slice here is, of course, Tether. Tether has about 60% of the stablecoin market. USDC has another roughly 30%. So the rest of this tiny wedge is the remainder of all stablecoins. It's only there where you start to see the first three slices that are red. These are decentralized stablecoins. And even these decentralized stablecoins are kind of pivoting and trying to embrace the centralized stablecoin narrative. So these are stablecoins that may be launched as completely decentralized, but maybe they're holding real-world assets like treasury bills in the bank. And they're actually using these treasury bills to shore up their decentralized stablecoins. So they're arguably decentralized stablecoins that are becoming more like centralized stablecoins, which means that you have to go even farther down into these really tiny slices where the pie chart starts to disappear to find decentralized stablecoins. So you might look at this and say that, okay, why are we even talking about decentralized stablecoins? This is entirely a game of centralized stablecoins. They have won, and decentralized stablecoins are nothing. But we are here to advance the argument that it's actually a bit more Hegelian dialectic than this. And the synthesis of decentralized and centralized stablecoins is ultimately what gives them their power. What do we mean by this? When we are evaluating really stablecoins or any financial asset, we like to approach this from the point of view of, and this here, if you can't see, QR codes covering up the title, USDC DPEG. We like to just look at things in terms of risk factors, because I think we'll agree that everything carries risk. Even the so-called kind of risk-free rate that you get from treasury bills, there's still this risk that the United States could collapse as a country. It hasn't happened in several hundred years, but each day it looks more and more likely. So there's still risks even in the risk-free rates in DeFi. Basically, like everything is risky, and in analyzing the risks, you can start to better understand the financial profile. So, centralized stablecoins have risks, decentralized stablecoins have risks, and these risks are very different. So, here, as I mentioned, this is the USDC DPEG, and you can kind of get a sense of what a centralized stablecoin looks like in terms of its risk factors and how this kind of fraught weekend played out. This is back in 2023. It looked like the traditional banking system might collapse and there might be a bank run. And it happened at this really terrible time where USDC was trying to move some funds. And if you've been DeFi for a long time, you might forget that TradFi closes on weekends. So essentially, we weren't going to find out till Monday if this transaction went through and could keep USDC solvent. DeFi doesn't stop, so AMMs were still working, DeFi was still working, and there was a bit of a panic that hit, and USDC price went from $1 down to 90 cents. And a lot of DeFi is built and exposed to USDC, so all these DeFi protocols also depegged by about 10%. It was a very long weekend. And it also answers the question of how can you possibly make money off of stablecoins? Because if you were like me, you saw USDC depegged and you made the calculated bet that, well, if USDC goes to zero, in fact, like I'll be wrecked anyway. But if it repegs, which it probably will, because USDC is pretty sound, you can bet on the repeg. So a centralized stablecoin depeg can happen. It's maybe rare. And when it happens, for me, it was just a good trading opportunity. So it's not like the scariest thing in the world. Compare and contrast this with when a decentralized stablecoin depegs. And here we see US Terra, UST depegging. And this one, if you had $1 in UST, we feel really bad for you. But there's just a lot of ways that decentralized stablecoins can depeg. One of the key differences, for example, is smart contract risk. If you are a decentralized stablecoin and everything is collateralized in a smart contract, if there's a bug in that smart contract, the collateral can be drained, sent through a mixer, and disappeared. And then it can be very tough to recover. So there's insane smart contract risk in decentralized stablecoins. If you're a centralized stablecoin, there's also going to be smart contract risk. But if your funds are held in the bank, if the smart contract gets hacked, it can cause some chaos on chain, and any protocol that's exposed to it can be in trouble. But the good news is for the centralized stablecoin is at least the money's still sitting there in the bank, which you still have access to. So the centralized stablecoin is much more like bank risk. But why are we bringing this up? Why are we talking about risk? It's one of the kind of fundamental properties of stablecoin and really crypto in general that risks and rewards are very highly correlated. And this seems like an obvious point, but people don't really seem to get this because they'll see yields and they'll get excited. But yields is just a function, essentially, of the underlying risk. You can really understand this because the way that decentralized yields tends to work is, kind of a game like the following, where you'll basically take a pile of money and dump it into the center, and then you will aim a fire hose of money at this pile of money, a pile of dollars. This fire hose that you're aiming at, it could be a token that you're minting out of thin air. It could be trading fees that you're getting from that pile of money. Whatever it is, you're just aiming a fire hose of money and daring people to pick up the dollars in the center. And people will do it because there's a fire hose of money pointed at it. And each time people do, that fire hose starts to get weakened ever so slightly as that fire hose gets directed to people's bank accounts. And it will continue to dilute just right up until that marginal point where a degen looks at that pile of money and says, it's not really worth the risk. And at that point, the effective APY that you would get from dancing or playing with this pool of money kind of stabilizes at essentially this equilibrium point. And this tends to be the APY that you see advertised. And you'll notice within decentralized stablecoins, this tends to sit somewhat at the kind of risk-free rate and usually just above. So if T-bills are giving 5%, then you'll find that the DeFi rate will be maybe around 7% for the kind of higher quality stablecoins. And the crazier ones can be 20, 30%. That 20, 30% is really just a measure of saying no one was willing to touch this. It's higher risk, therefore higher reward. That's the other interesting thing about DeFi stablecoin yields is that there's no better form of marketing than high yields. It's sort of like a bat signal. If you can basically say, hey, this new pool just launched and it's currently earning 500% yields, throw that in the next post and you'll find critters coming from all over the DeFi ecosystem ready to grab that and kind of be earliest to the pool to get this down to the risk-free rate. And if you take these two fundamental properties, the fundamental property that risk and reward are highly correlated, and the fact that rewards is sort of the best marketing in DeFi, you can see where this is going to lead to very toxic cycles, because I offer 20%, someone else offers 30%, and all this is saying, like, our pool's riskier. Come over here. We got the loosest slots in town. And you're going to get an audience for that, as you see here in Vegas. But eventually the risk is going to manifest and there's going to be collapses. And this is why we see these boom bust cycles play out with such frequency in crypto. When the Genius Act was trying to look at how do we actually build confidence in stablecoins, it might have been the thought process that, like, we can't actually get rid of these properties. So why don't we just architect a system that doesn't allow you to advertise yields? And this is one of the, like, controversial and somewhat misunderstood points of the Genius Act. But it is true that there is certain prohibitions on yield in the Genius Act. And this kind of sucks on some level, you might say, for stablecoin issuers, because, as we just said, yield is the best form of marketing. We've seen people try and advertise like we're more composable, we got deeper integrations, but at the end of the day, yield is that core piece of marketing. And who benefits from a ban on yield? It has to be this Tether, that 60% slice of the stablecoin market. Tether has the best stablecoin business, or even the best business on the planet, period. Because Tether's got about $160 billion worth of Tether out there. It is largely in the form of treasury bills or dollars earning yield, with the treasury bills giving at least 3.5%. That's like just free money flowing into their bank account, because Tether pays out zero of these yields to customers. It all goes to Tether and allowing them to, like, grow their empire. So every other, like, potential stablecoin issuer on the planet is insanely jealous, because how do you possibly compete with that? They got to this position because they launched back when stablecoin was an extremely gray area. They, for years, kind of existed this quasi-legal state, and now that stablecoins have become finally, through the Genius Act, there is, like, actually, like, a regulatory path and a regulatory like framework around stablecoins. They essentially been grandfathered in, and they've got insane liquidity throughout all of DeFi. They don't need to pay out yields because they've got such powerful network effects from having been around so long. They become systemically important, and other asset issuers, be they stablecoins or crypto assets, are willing to subsidize and pay incentives because they want to be paired with Tether, because that gives them such great confidence and such great access to liquidity. So Tether is in an insanely good position, and it feels very unfair if you were an institution and you're waiting for there to be a rule book in place before you launched, because how do you compete with that? We can look at the second place, which is USDC. So this is a chart of how Circle makes its money. And you can see that it's a very tough business to be a stablecoin, but they're still able to eke out about a 9% margin, which is not too bad. So Circle, as we saw from that earlier chart, is about 30% of the stablecoin market. They've got $60 billion in USDC out there. And if they're getting 9% margin on it, it's pretty good. So it's still a very good business. But Circle USDC is very different from Tether in a lot of ways. One of which is that, well, first of all, let's look at the Circle IPO. Circle also IPO'd a few months ago in June. And when their IPO hit, it was one of the few ways that if you were interested in the stablecoin narrative, which people who were paying attention could see was going to be pretty hot, could actually gamble on the stablecoin narrative. So their IPO was priced at $31, and it quickly popped to above 90. So it's like a quick 3x pop. It's come down a bit as people maybe, like, dug out that chart and realized that stablecoin is a tough business, and Circle's got its challenges, like all the stablecoins in the business. But you can see how traders are eager to get a slice of the stablecoin narrative. We bring up USDC in particular because it highlights this thing that we talked about, the Stablecoin Genius Act, and this prohibition that they have on certain forms of yield. because if you have USDC on Coinbase like I do, like I get some rewards every single month for keeping my USDC on Coinbase. Now, isn't that flat out illegal? If you know a lot about USDC, you know that it was not initially just Circle that was the issuer of USDC. It was both Circle and Coinbase. They co-launched USDC as a joint initiative, but in 2023, Coinbase stepped away and basically gave Circle the full minting rights. And this came up in the aftermath of the Genius Act passing. People were asking on the, I think it was a Coinbase earnings call, where they're asking Coinbase CEO Brian Armstrong, how is it that they are giving these rewards for USDC holders? Isn't it completely illegal? Oh, by the way, quick auction update. The auction has been extended because we just got another bid. It jumped from 8888 to bidder OXF7AD bidding 9999. So it's still possible to win the Squid Pass. The auction's been extended by another 10 minutes. It's now the minimum bid price of 10,499 squid. Good luck to you, gents. All right, back to Circle USDC. Brian Armstrong was asked, okay, so how is it that you're still paying this out? Isn't this blatantly illegal? But if you actually look at the text in the Genius Act, it was very deliberately crafted. And it just says that the asset issuer is not allowed to offer yields. And they said, Brian Armstrong said, well, we're not the asset issuer anymore, and we're not offering yields, we're offering rewards. There's a very major difference between these, and that's entirely fine according to our reading of the act. And it does in fact seem like the Genius Act was constructed in such a way that allows, let's not call them loopholes, it's just deliberately allows and permits the activities that we know make stable coins so great. Another auction just rolled in. I'm going to switch this to the auction page. 12,420 from OX780 for the Squid Pass for the week. So it's now 12,420, which means the new minimum bid price is 13,041. Way to go, Degens. So the Genius Act knows how stablecoins work, and essentially they were trying to the way the Genius Act works is it says we're going to carve out this special class of regulated stablecoins that have certain privileges, and here's the rule book you can follow if you want to be a regulated authorized stablecoin. If you don't want to be that, if you want to be a decentralized stablecoin, they very deliberately do not have prohibitions against decentralized stablecoins. In fact, it's almost the opposite. The act is very fine with creating liquidity pool between a centralized and decentralized stablecoin. They're not trying to limit decentralized stablecoins. They're just trying to say, if you want to be this get this special badge of being a regulated and authorized centralized stablecoin, here's what you have to do. And in a way, this is how U.S. financial imperialism works. U.S. has deputized this amazing set of stablecoins to go out and have this badge of honor, but it's allowed to go out and intermix with the decentralized landscape. And this is really how the playbook for the successful stablecoins lately has worked. All the latest stablecoins that have launched, especially the centralized ones, and found product market fit, found success, have done like Coinbase and continue to offer rewards. PYUSD is also similarly offering rewards. And a lot of the stablecoin projects that have launched have found particular success at straddling both TradFi and DeFi. So this is back to the thesis of why TradFi stablecoins need DeFi stablecoins. Because if you're the asset issuer and launching your own stablecoin, you need access to the kind of fundamental best marketing in DeFi and in cryptocurrency, which is you want to have good rewards for your stablecoin. And you want to do this by embracing decentralized stablecoins, but not just any decentralized stablecoin products. We would not recommend that you just find some random stablecoin that's backed by a meme coin and offering 5,000% rewards because it's going to collapse tomorrow. The projects that have found success have found the quality projects building in DeFi and lead heavy into those. How do you find them? Quick plug for a project I helped launch. The Open Stablecoin Index launched just a few months ago. This is built off Reserve Protocol's DTF, or Decentralized Token Folio, which is essentially an on-chain ETF. ETFs are great because you can own the stock market and you don't have to think. DTFs do the same thing. And in this case, the Open Stablecoin Index is a index of projects that are building open stablecoins and considered to be high quality projects, such that voters that do a quarterly rebalance of which stablecoin issuers and stablecoin protocols get to be in the index, shows that these are significantly high quality protocols. And just a quick note, we mentioned that Circle popped on the IPO, which you could read as a proxy for trader demand for centralized stablecoins. Open Stablecoin Index launched with a price of $1. So you can see that the decentralized stablecoin Meta is also, speculators are also interested in getting access to it. Holding the Open Stablecoin Index is a way that you can passively have exposure to this kind of open stablecoin project. So if you're a centralized institutional bank and you're interested in getting launched and started on chain, and you'd like to lean into open stablecoin projects, take a look at the basket protocols here and try talking with any of them. They're all fantastic, high quality projects. It's not just the projects in this basket you can talk with. Another great example of a project that is straddling TradFi and DeFi is Maple Finance. They're doing this perhaps best of anyone, found an outstanding product market fit. Their thesis lately has been that, it looks like there are a variety of companies that are buying Bitcoin and putting them on the balance sheets. And the CFOs are not going to be satisfied with just holding Bitcoin. They're going to want to find a way to earn yield. Now, remember, DeFi has solved yield, TradFi has solved liquidity. Maple Finance sits right at this intersection, and they say, well, we can get you some good yield, DeFi yield on Bitcoin, or DeFi rewards, maybe they're calling it. We don't know the exact terms. You give us some of your Bitcoin on your balance sheet, and we'll do the rest. And as a result, they are seeing their key metrics growing like crazy because they have figured out how to solve this intersection of DeFi and TradFi. Incidentally, they also have their own decentralized stablecoin, Syrup USDC. Another interesting project that might be jumping in on this is Yield Basis. Yield Basis has figured out a way of basically, as they describe it, removing impermanent loss, probably reducing impermanent loss. We'll have to exactly see when it launches. It looks like their target market is going to be Bitcoins. They might also be honing in on the same product market fit of companies, like institutional companies that have Bitcoin and are looking at how that they can get and juice yields on this. And this essentially brings us to our final pitch, our final point on why we argue that this traditional finance needs decentralized finance projects, which is that decentralized finance has been running for about 5 years now. It's gone through millions of boom busts, mini cycles. It's figured out what infrastructure works and what infrastructure doesn't. And it's only recently that TradFi is allowed to join the party. And it sucks for TradFi that you're a bit late if you're just launching stablecoins now or even haven't launched yet. But what's great is you can just look and lean into the plumbing that already has survived these battlefields for 5 years, and you can lean into that. One great example of this, of course, is BlackRock. BlackRock is fantastic at figuring out how to work within the traditional finance system. So they probably better than any other company on the planet are tapped into TradFi liquidity. And their BUIDL fund has been extremely successful in the realm of the centralized stablecoin projects. And they also show off how to kind of navigate the Genius Act because they wanted to be able to juice participation in the BUIDLs. So I'd recommend looking at the Curve News blog to read about how they were able to partner with Elixir to be able to incentivize the pools on with their BUIDL fund on chain. Finally, if you're not familiar with it, running out of time, but when I'm talking about decentralized stablecoin projects and destabilized stablecoin infrastructure, pitch to look into what is going on with Curve Finance. All roads lead to Curve. Curve has been around since about 2020. Back in the day, it was largely derided as a stablecoin exchange because stablecoins weren't a hot narrative back then, and people said that can't be a real business. Curve got a lot of business by focusing on stablecoin trading, in particular launching with a better stable swap invariant. If you are not a math major, this chart is still pretty easy to understand. Green is the type of trading formula an AMM will use to provision liquidity. It works great for assets that shift in price, but stablecoins ideally are holding a price. So Michael Egorov figured out that if you want to do stablecoin trading at high volume and low slippage, you need to make this look more like a straight line, because that would best resemble a constant price, but it has to be able to arc at the corners in the event of a depeg. And I was able to build a huge business off of this. Since then, Curve has expanded its footprint. It has V2 pools, which are very good at crypto trading. It has its own decentralized stablecoin itself, Curve USD. But this is this same thing I'm talking about, where TradFi, if you are trying to launch your own stablecoin now, you could try and like build your own stable swap invariant from scratch, or you could lean into the plumbing and infrastructure that already works. And we would highly recommend you do the following. So feel free to contact me if you're interested in launching a stablecoin. If you're an institutional player that just launched or is interested in launching a stablecoin and interested in geeking out, I am available to speak with after this talk. Or if you are interested in launching your own L1 or L2 and having very high volume, low slippage trading Curve algorithms on it, we should also talk. Or if you just want to geek out about stablecoins because they are fun and they're awesome, or you have questions about anything in this talk here, I would invite you to come chat with me. Best way to do it is we host Llama parties every Friday, and we just post the links in the chat so you can just pop up on stage and come and chat with me here. So this has been my latest rehearsal of the talk that I'm going to be giving a little bit later. Already just going through this exercise, I realized a million things I did stupid. It's always too painful for me to go back and listen to this, but even doing it real time, I'm taking notes in my head and saying, woof, I whiffed that, messed that up, or it'd flow a little better if I changed this or that out. But that being said, I still have like a few hours left where I will be rehearsing this in my head, or in front of a mirror in the bathroom. So if you have comments on this, like you've got a few hours to get them in, and would be absolutely excited to hear your feedback on it. By the way, the auction expired. OX780 won the auction. So congratulations on winning the Squid Pass. We talked at the beginning of the show about what the Squid Pass is, and this was one of the more competitive auctions in recent memory. So congratulations on winning the Squid Pass. This gives this auction gave you the ability to, oh shoot, I dropped the Squid Pass. Let's get that back on there. This gives you access to the Squid Pass on all of our live streams. So anyone who points their phone at that QR code on this or any historical live stream will be updated with the link that the winner provides. Most likely, I think, if I recognize the alphanumeric digits, that is going to be a Oz again, I believe. If you're interested in this, we'll have another auction next week. But in addition to the inventory here on Leviathan News, it also is inventory around the entire ecosystem of. So we have live streams, we have the Twitter feed, we have the we have the website, and we have the what's it called, the Telegram feed. So a lot of amazing inventory that you can buy with one pass. We actually are working on ways to allow runners up to also get some inventory. One of the ways that we're doing this is Project Inkling. If you took a look at the website recently, you'll notice, or the Telegram feed, you'll notice that we launched commenting within Leviathan News, and it's been a lot of fun. And if you know much about how Leviathan is structured, each month we give out these monthly squid emissions. Exactly 1 million is authorized to be dispersed in squid each month. 1 million squid, that is, not $1 million. Maybe one day, we'll find out. 1 million squid gets issued each month to people that participate in the Squid Leviathan ecosystem and do what they can to kind of bolster the Squid ecosystem. If you're leaving comments this month, I'm going to be putting a lot of voting weight behind rewarding you. So there might be incentives to be a reply guy, to come to leviathannews.xyz or on our Telegram feed and comment on our articles. And if you're in that top spot, you're going to get more squid. So it's going to be weighted. So when they give the proposal, whoever achieved the top commenting slot gets bonus squid. So you want to reply guy, you want to be first, and you want to leave a very, very good comment. It's a deliberate choice to target reply guys because we've noticed that like we've done very well at Leviathan when we've gone kind of opposite the currents. So a lot of sites we noticed when we launched Leviathan would say, you're not allowed to shill your links here. Go away. You're banned. You've not followed our terms and conditions. And we said, Well, we're going to pay you to post and spam your own links. And like, if you have an amazing thing that you're building, we want you to come first to Leviathan and share it, and we'll pay you for it. And that's gone very well. We end up scooping a lot of stuff and really conquering the niches of DeFi. We hope to continue doing so. And so where other places are like, hey, reply guy, we don't like you. We don't want you to be a reply guy. Reply guys suck. We're saying the opposite. We think reply guys offer such valuable commentary, such that we're willing to host this kind of like real-time competition for who can offer the best reply guy comments on our newsfeed, and we're going to pay you for it. So, reply guys and shills, you are welcome within Leviathan. So, I have to save my voice because I need to talk later today. I'm not seeing a lot of commentary happening in the chat. Happens sometimes. As mentioned, when I'm hosting a party, it tends to default to this. That's fine. I need to get up and first of all, I got to register for the event, so I am going to bounce. It's been a pleasure spending the morning with you. I like it when we have fewer viewers because it means for kind of tighter interaction. It means I can like geek out on subjects that are like maybe super niche. Like in this case, maybe this wasn't the most interesting for you, but I'm. Hey, Asun, welcome. How's it going? I got to meet your boy Ian that you put me in touch with last night, and might I say, like, super impressed with what they're building with the Midnight blockchain. Like, that is some solid stuff going on right there. So I was super tired when I was chatting with Asun. Basically said, "Hey, you're gonna be at Rare Evo. You got to connect with my boy Ian." I was like, "Yeah, of course." Asun is behind Gamok. Gamok's one of my favorite projects. They are. We connected because we're both big Curve maximalists, and Gamok has built these kind of amazing AI agents that like work super well with Curve. But he said you got to talk with my boy Ian. Ian is building a Midnight blockchain. They're actually sponsoring this kind of fun party last night. Now that's a party that had like lots of people, not like a Llama party, which is just me, but like an actual like traditional definition of the word party where multiple people get together and talk with other human beings. But they were able to pitch to me what's going on with the Midnight blockchain, and they seem to they haven't quite rolled out yet. It sounds like they're rolling out in the next few months, but they've got a pretty amazing formula for how they're going to do that. They seem to have built like a blockchain. They Ian directly like says like, hey, like why do we need another blockchain? But they laid out the case for why like this is a blockchain that's got like some privacy preserving features in it, which is but also the ability to have KYC attestation. So essentially, like they're looking at the market of institutional players coming on chain and saying, what do they need? Because institutional players are the ones that want privacy more than anyone. Like if you talk to a major asset fund manager, they're going to say, well, our trading strategies are secret sauce. Like why in earth would we just like go on a blockchain and let everybody copy trade us? So the people who want privacy the most tend to be institutions. At the same time, like they're also beholden to KYC laws, kill your customer laws, and because that's the law of the land for them, they're saying, we absolutely have to follow these rules, and we can't do it in a privacy preserving way. So, if you were looking at like Railgun, for example, Railgun also like figured out ways to like have a privacy protocol and also like be able to prove that this money did not come from North Korea. Midnight also has a very interesting take on how they're doing this. They also have this super interesting 2-token model for how they're launching. So a lot of cool stuff. Recommend that you check out Midnight Protocol and all that. But anyway, I see a lot of people just joining us now. Thank you so much. We do appreciate you just joining. But we're not here in Vegas to sit in our hotel room all day, so we have to get out. We're going to go see if we can get registered for the Rare Evo event. We're going to go see if we can actually do that, like talking with other human beings in person and not virtually. But we do appreciate you spending some time here. As I mentioned, I haven't really gotten a chance to do much at Rare Evo yet, so I'm going to go check it out, see if I can get the lay of the land, and I will report back to you. But really appreciate you joining us here in Vegas virtually. So big shout out. This has been another fun and successful Llama Party. We keep the trend going every Friday at 7. And more recently, the way to get in the Llama Party is just join us at 7. We'll toss the link in the comments, and you can just join us on stage here. So that's live streams you can look for on your X or your YouTube feed. Congratulations again. This is a squid pass that goes to AIOZ. They have been killing it. And if you scan that QR code or head to our website, Telegram, or Discord, you'll be able to get the AOZ Discord and hang out with all the people there. They got a great Discord. It's a fun atmosphere and environment.